What's up, everyone? All right, so in this episode, well, you know me. My name's Ross Cameron, and I'm a long biased trader. And sitting next to me is...
I'm Chris, and I'm a short seller.
So today we're going to talk about the difference between going long and...
going short.
All right, so let's jump into this long-short episode. I don't have any like catchy name for it. It's just the name of the episode. We'll come up with a name later. So I think the topic here is long and short. And why don't we start this by you telling me a little bit, because a lot of people, you guys already know, my strategy. I trade alongside, how I trade. So tell me a little bit about why you were attracted to trading to the short side versus sort of jumping on the momentum and trading the long side. What drew you to the short side?
Sure, absolutely. And I started trading long when I first started trading. I think what eventually drew me to shorting was as I was trying to pick the stocks that I was trading each day, I felt like I spent a lot of time trying to pick which stock was going to be the one that was going to make the next move.
Yeah.
And I really struggled with that because I jump in a lot. I'm a really active trader. I like trading actively, and I would just jump in a lot of stocks that went nowhere, and I'll take small losses or would just sit there. And I was getting really frustrated. So what I noticed is, after a stock had made a big move,
right,
I'd be like, well, this is the one. I'm not trying to figure out which stock is going to make the next move anymore. Now it's, okay, well, this could be a good short.
Right. See, that is so that like explains how I started trading in so many ways, because I would use scanners and I would see these stocks popping up and I'd be like, oh, do I jump in this? I don't know. Do I jump in this? I'd maybe jump in 5 of them. None of them would go. I'd lose on all of them. I was like, oh man, what's going on? And then finally one starts to go. And then next thing you know, unless you chase it, you've like missed the move.
Right.
And you're like, oh, I've missed the move. Right. But now, of course, you can short the way back down.
I can short the way back down. Now, they don't always go immediately right back down.
Yeah,
a lot of it became developing a strategy and learning as much as I could about short selling to prevent me from getting stuck in a stock that's going straight up.
Yeah.
Right.
Right.
So a stock that's making a big move, which is the one that's going to continue, which is the one that's likely to fade. So, the strategy became more about optimizing my timing and position and sizing, my entry prices and all that. To get the best shorting opportunity,
right,
define my risk, and go from there.
I'm having this kind of vision of the ocean right now, and I'm thinking of the waves, right? And so you have a stock that's got these big waves going up, like let's say like 10, 15 foot waves. We've got a big range. This is a stock really ripping. You've got big waves up, but even on something that's moving up, you have these correction periods,
right?
And they can be short windows where you have the move up and then you have the leg down, which could be the formation of a bull flag.
Right.
And that can be the opportunity, if you're scaling in short, to then cover as it's coming down to that support, be all out, and then, you've got the next leg up, and then you're waiting for the next kind of wave back down.
Absolutely.
So you're really like kind of trying to, and you're not, just so I understand, you're not like going in with one entry, like trying to pick the top. You're slowly scaling in on the top of those waves, right?
Correct. Yeah. So for the most part, I'm not trying to pick that top. I'm scaling in size and trying to get a good average price for when it does wind up reversing, at least in the short term.
Right.
I do have some setups where I'll have a little more conviction that I feel like we're pretty close to the top.
Okay.
Where I'll hit it with a little more size.
Okay.
But still,
yeah,
I need to give myself a little room,
right,
to develop a better price.
So if we had a stock that was approaching like the 200 moving average and was already really extended on the 5-minute chart, it was, way above VWAP and everything else, something like that might be a setup where you say, okay, I've got a little more conviction that this probably is the top of this wave. And we may not just pull back for like the leg down. This might just be like an all day kind of like trickle down fade.
Yep.
You've talked about how you are a bit more of a scalp trader. So you're short selling, but you're not like swing trading these to the short side. You're scalping.
Right.
Like you and I today, we both traded the same stock and we're both green on it.
Right.
I was trading and actually yesterday we both traded the same stock and we were both red on it.
We both lost on it.
So we were both trading I was trading the leg up, you were trading the leg down. And the one that we traded yesterday just happened that it was very choppy and confusing. And so we both had a hard time getting a read on it.
Yep.
Think about this ocean where you've got very small waves. So we need the big waves to give us the range.
It's a little more forgiving when we have the big movement.
Right. You've got bigger range, you've got more opportunity. So there's sometimes this belief that, oh, we're in a bear market. That must mean it's great to be a short seller. Would you say that's true?
I would say that is not true. I think
Really?
it's very difficult to short in a bear market because we don't have as many stocks moving. We don't have as much range.
Right.
So we can be just as limited as everybody else because we don't have as much movement.
You need the
know?
volatility.
Yeah.
Yeah.
Especially for my strategy because I am, scalping the front side momentum to the short side. I'm not looking for something to fully fade or something that's had a run up for 4 or 5 days in a row. Now I'm looking for that big first red day
Yep.
to get a big move. So yeah, I need stocks that are moving up and retracing.
One of the things that I used to say, I used to sort of believe that reversal trading was one of the easiest strategies to learn. And I used to say, like, look, if you have a stock that's got 5 green candles in a row on the 5 minute or something like that, 5 to 10 green candles in a row. And I would scan for stocks that had consecutive green candles. Minimum was 5. So when you have a stock that had 8 consecutive green candles, I just start looking at it for where's the reversal.
Sure.
Now, of course, in those days, I didn't have availability of shares for most small caps, and they didn't have enough range usually either. So I was trading that on large caps. And inversely, if we had a stock that had 5 consecutive red candles, I was looking for the first candle to go green for the bounce. And I always at that time felt it was easier to be a reversal trader because you didn't have to chase it. You just waited for that obvious sign of,
A little curling.
it rolling over. However, and while I did find that I had a pretty good profit to loss ratio on that, because, usually you can keep a pretty tight stop and then when it drops, you can get a nice reversal. I did find that I never had really very big winners. And that kind of beat me down a little bit because then occasionally I would have the one where I got squeezed. And next thing you know, it's just continuing to go. And you're like, oh man, are you serious? Like, it's up $1 a share. I should have gone long.
Yeah.
Right. So I think for some traders, reversal trading, counter trend trading, both shorting something that's strong and buying something that's weak can feel a little bit easier to read. But then what are some of the challenges that you face with being on the short side,
Yeah. I mean,
especially on small caps?
I would say that we experience a lot of the same difficulties. One, if I didn't get in with a good entry and I missed the move, and something's starting to dump, I don't want to feel like I'm chasing. I'm so
Right.
contrarian that I kind of want to get in before it makes that movement to the other side.
Right.
So once it already does make a big flush or dump, I'm already at that point. I'd feel like I'm chasing, and then the bounce is coming already.
Right.
Or that flush long that we talk about.
That was a problem that I had with reversal trading as well. I wasn't scaling in. I was waiting for the first candle to go. I was watching 5-minute charts, and then on the 1 minute, I was waiting for the first candle to go green for a bottom reversal, or the first candle to go red. But sometimes these mid or large caps would be like 70-cent candles. So I'd be like, oh, this does still have another $2 of room, but I'm in 70 cents off the high.
Sure.
And then the times where I would start just sort of scaling in as it was going up, I had a hard time with that because I feel like I'm just shorting something that's like a moving train.
Right.
And I had a hard time as a beginner really reading, like, is this the right spot to start shorting? You have some of these stocks that go parabolic that go up $4, $5, $6, $7, $8, $10 a share.
Right. And a stock doesn't always go parabolic immediately. No. There's almost like this fake out peak before it sometimes where you're thinking, okay, it's starting to roll over a little bit. You get short. And if you don't cover in time, that parabolic movement can come on very quick.
Yeah.
It just starts grinding and then boom.
So do you have a set of rules of maybe the type of stocks that you would avoid because they maybe have a little bit more wild card risk of going parabolic?
Absolutely.
Okay. So what's that?
And it's really just, something that might be a little lower float for sure is definitely something a little more careful of, something that's SSR.
Short sale restriction. Okay.
I'm wary of easy to borrow stocks.
Also, okay.
Yeah. I mean, well, it's nice to not have to pay for locates. One of the issues that I think we see is a lot of people will jump in because they don't have to pay for locates. So we have a lot of people that aren't usually shorting, and they'll short the stock because it is easy to borrow. So they'll get in a little early, too early, premature.
And then they're having to market order cover. Right. And then that's fueling.
And then we'll see a massive squeeze in these easy to borrows. That'll also just tend to grind up slowly without taking a breath. Right. We see that a lot as well with the easy to borrows.
Yeah. And that's funny. Those grinders are hard for me to trade as well as a breakout trader because they're not really they're not pulling away. So I feel like as a breakout trader to the long side, I'm looking for, entry at the $0.50 and a 15, 20 cent move. And grinders don't really do that.
No.
But then if you're shorting into strength, it keeps not giving you that reversion.
Yeah, you don't get the chance to cover really. And by the time if you're not patient with your sizing, it's just the average price is gonna get too far away from you.
So what can start to happen is that curling, that sort of grinding, and then you get that sort of ascension where it just starts to pull away.
And that's the movement that we all fear.
Yeah.
The short seller.
Yeah.
Because I could have gotten out, 20 cents ago. I probably haven't defined my risk as well because it is kind of grinding a little bit. I'm a little comfortable adding because it's not moving away from my price too fast. I'm not getting nervous.
Yeah.
So I tend to hold those a little longer, and it can be dangerous.
So, one of the reasons there's a couple of reasons that I don't short very often. One of them is for a long time, I've been trading in a retirement account. You cannot short in a retirement account, right? So no shorting in retirement accounts. One of the second is availability of shares to borrow. A lot of your regular brokers like TD Ameritrade, E-Trade, they don't have shares available to borrow of most small cap stocks. There are some boutique brokers out there, but some of them have higher minimum balance requirements. And then even if you find the shares available to borrow, it's the cost of paying for it.
Yeah.
So all of that for me kind of created a little bit of an obstacle where I felt like as a beginner trader, when I was getting started, it was just too difficult to short small caps. And in a lot of ways, the strategy that I trade, I kind of continue to sort of cater to beginner traders because those are so many of the students that are part of our program.
Right.
So I've wanted to trade a strategy that is relatable, that they can understand, which is why I'm not trading like Tesla and Amazon. But it's also why I'm a little bit more cautious on the short side.
Sure.
So how do you kind of overcome those obstacles, or what I see as maybe obstacles?
Yeah, and they are obstacles, to be fair. I think for me, I look at it as the cost of doing business and the price I pay for my edge.
Okay.
Right. So it is where I see the edge in the market. It is where I found consistency and it just feels natural to me, and I feel like when you find a strategy that just feels natural, it feels like it aligns with your personality.
Yeah.
It makes things a lot easier.
Yeah,
so
that's true. It's easier then also to overcome the hurdles because it just feels like a good fit.
Right.
Yeah.
And not abandoning when I get a bad trade or a series of bad trades or, a bad week or even a bad month. I still have a lot of conviction and faith in my strategy over the long term.
Yep.
So I look at that as the cost of doing business and, the fees do add up, but as long as I'm profitable and doing well, I was previously a business owner and I had expenses, and just like that business, this business has expenses for me as well.
Sure. Okay, that makes sense. Now, what about, and people ask me this all the time, Ross, you're trading the upside move. Why don't you flip and go short off the top? So do you flip flop?
I do not flip flop.
I don't flip flop either.
No, I find it very difficult because I'm looking for particular setups.
Yeah.
And when I'm sitting and waiting for my setup, I don't want to be distracted with trying to figure out other setups, especially one that's completely inverse of what I'm used to.
Yeah. It's funny with us trading here side by side, we're talking and watching the same stock and I'm trading it on the move up and I'm saying, okay, I like this micro pullback and this and that. And I could tell you're looking at it and you're thinking about, okay, when is this going to be a short? And it's really hard. I think it'd be very hard to keep both those perspectives in the front of your awareness at the same time. Because sometimes when I'm maybe scaling out of a long position, you might be starting to scale into a short position. So there's some overlap there of periods where we're both in the trade.
Right.
And then that's where if you were going to try to flip flop, you'd have to choose the point where you go totally flat long and then go totally in short, which is not how you short.
No.
And that's not how I trade long.
Right.
I don't go completely flat. I'm scaling in, I'm scaling out.
So where do you draw the line?
Right. And one of the things that I've noticed in myself, I've tried to flip flop. Sometimes there'll be a stock that's easy to borrow. And I'll say, oh, well, I won't trade it in my retirement account. I'll trade it in my main account. I'll go ahead and try shorting this. And I find that if I lose on it short, there's a quick instinct just to be like, cover the short, flip long. And then if I lose on it long and short, I feel just so frustrated. Yeah. Right?
Absolutely. And there's another dynamic too of the scaling in process or averaging in and averaging up.
Yeah.
I feel so much more comfortable averaging up and it tends to work out a lot better for me with the fade than it does to the long side.
That's interesting.
Essentially, you know, I have more faith in a stock taking a flush or at least breaking a certain level more so than I have the faith that the stock will reclaim or continue to go up.
Interesting.
So if I'm averaging down as a stock is, you know, a big momentum stock has just made a big move, it's coming down and I'm averaging in, you know, I feel like just that always has exacerbated my losses when I tried to trade long in the beginning.
Interesting.
And my experience on the short side has been very different.
Yeah. Yeah, there's definitely with the momentum, when things lose their steam, they can really fade hard. And averaging down on a long position that's going down against you, the thing is, if you were trading a reversal that was selling off like 40% and you were starting to accumulate, then I think averaging down in that context for the curl back up would be more in line with the way you're trading,
right,
which is trading the extremes. But for a trader, like me that is buying mid-range and then it goes up and then immediately knifes down, trying to average down on that when you're in this range and now it's just shown you this nasty false breakout, that's a really hard place to be averaging down. That's a place where a lot of times your losses are going to get bigger.
Right.
It's so important that it stays strong, that it keeps hitting the scanners, that it keeps moving high, the chart keeps looking good. And as soon as it's like a broken chart, then, the shorts are really kind of like in control. I mean, It's just because longs are going to look at it and they're going to be like, no, I can't trust it. So if you're trapped long too high, that's when I think you can get that long fade where people just kind of keep throwing in the towel. And reality sets in that this stock probably doesn't make sense being up 200% on the day.
Right.
So that's when you get the all day fade.
Yep.
The flip flopping is a tricky one. I've seen some traders really go like full tilt with the flip flopping, where they're just like
trying to catch both sides of the move,
getting more and more and more and more frustrated.
Yeah.
So what would be for a beginner trader that's thinking about dabbling on the short side or is maybe wanting to learn that strategy? What's some words of wisdom that you would share with them?
Yeah, absolutely. For myself, I found, two of the most influential aspects of my success were one was sticking to the one strategy and sticking short, not trying to do both like we had just talked about, but also sticking to a particular strategy and setup.
Yep.
It's easy to get convoluted with so many setups and so many different patterns, which, can be confusing to start.
Right.
But the second aspect of that is that we lose track of the variables. What is working, what's not working. When you're doing all these different patterns, different trades and setups, it became a lot easier for me to focus on and optimize a particular setup.
Interesting. Yeah.
So that was one main aspect of it.
Yeah, that's a good one. I think that, and you don't trade multiple stocks at the same time usually, right?
Sometimes I will. When it gets really hot, I will get into multiple positions.
Okay.
But for the most part, I'm sitting around waiting for one.
Yeah.
As of late.
Yeah.
But if there's a couple things moving, I will take more than one. Yes.
Okay.
Yep.
I always find it difficult to focus on more than one, but I guess I'm the same way.
My trades also tend to pan out a little longer than yours.
Yeah.
So I can put orders in. I often do put in profit taking orders. I tend to not put in a hard stop, but I will.
Yep.
If I have too many stocks going on, more than one.
Yep.
I'll put in a hard stop and I'll put in some orders just so I don't miss a good flush.
Now, theoretically, what is your maximum downside on a short? Technically,
it's unlimited. It's infinite.
Yeah. Right.
A price can go up infinitely.
Right. And that's the problem. We saw HKD go from like $40 to $2,500,
which is, and it's infinitely more risky with a small cap because these prices are so low.
Right.
So if you think about it, a $2 stock.
What's your best potential? It goes to zero.
Yeah. So you're only losing $2.
It goes to 8 to 12 to 15.
So 10x multiple risk, margin calls, owing your broker more than what you have.
Yeah.
Yeah. So
there's real risk with shorting. Now, because you're shorting and you have to buy back potentially at a higher price, there's also going to be different margin requirements to short, right? I mean, you can't put 100% of your account into a short only for it to go up and then immediately be pushed to a margin call. I mean, even if it's only a $10,000 margin call just to settle the trade because you have to buy it back for a higher price than you have the buying power for.
Yep.
So then your broker, do they automatically require like a certain amount of buying power to take a trade? Like basically like they restrict you. So you have to
do. Yeah. And it's different. Different traders have different risk
Sure.
settings. Beginner traders will have tighter risk settings.
Yep.
I really haven't changed my risk settings all that much
So
from
you're
once I
still
started.
kind of on the tighter beginner settings.
I am.
Just to keep it.
To keep me honest, you
Yeah,
know.
yeah.
I really I don't want to get into trouble with with how risky a short can be. So, and I've been able to make really good money with these tight risk settings.
Yep.
So I said, hey, why am I going to mess with it? The other thing that's changed is obviously the equity in my account has grown significantly since I started.
Right.
So I keep a decent amount of money in there.
Yep.
So I stay cash.
Yeah.
And I really don't trade on margin because of it.
Right. Now, our metrics vary a little bit. Although I suppose I'm probably making more money. I've been doing this for longer.
Yeah, that's for sure.
You have much higher accuracy than I do. My accuracy right now is about 69 to 72%. It kind of is right in that range. You've been in the 90s.
I'm usually well into the 90s.
That's incredible.
I've been well over 95% over the course of a month,
right?
Over the course of 200 trades.
It's incredible.
I've traded 176 consecutive profitable trades in a row.
And what's your average hold time, would you say?
12 minutes.
12 minutes.
Yep.
Those are relatively quick scalps.
Yeah.
So you're shorting as they're going up, and then you're covering as they're coming back down. But there is a but. My profit to loss ratio is about 1-to-1. About I don't know what it is in cents per share, but it's 1-to-1. I think it's like about $1,100 winners and about $1,100 losers. And a lot of that is, it's just 1-to-1. That's just kind of what it is for, I think, scalp trading momentum to the long side. We're often buying high, so we're selling a little higher. Don't usually get huge wins. I mean, occasionally I do, but sometimes I get big losses. Your profit loss ratio
is drastically negative.
Yeah, because every now and then when you get the one that blows you out, it can be a big loss.
Yeah. So if something sounds too good to be true, it's usually too good to be true.
But to your credit, you're verified profitable.
Yes.
It is profitable. It is a profitable strategy. It's just that there's this component. So, and some of it, I think you could probably, if you wanted to, make the conscientious decision to keep tighter stops, which would then increase the number of losers you have.
Correct.
But those losses would become smaller. And so your profit loss ratio would decline as your accuracy comes down. So, in some ways, some traders who can be a little bit more stubborn or who just have more conviction can have very high accuracy because they hold things that are red that aren't working right away. But in the end, they end up working, except for the couple of times they don't, and then they have huge losses.
Right.
So,
and that happens quite often. I mean, a lot of my best trades start off red because I'm shorting into strength.
Right.
And they're still strong when I'm taking a position.
Right. And that's very different from trading the long side. When you're trading the long side, buying breakouts, you want to be green on that trade within the first 30 seconds. That means you timed the breakout correctly. I mean, if you're buying a dip, you want to bounce, spring off. If you're buying a bounce off VWAP, dip off VWAP, a break of VWAP, these are all break, bounce, spring type of breakout trades. It needs to work almost immediately. So we don't really have to condition ourselves too much to be comfortable holding red. So I think momentum traders tend to, as soon as it goes red, it's like maybe average down once, but if it doesn't go from there, just cut it.
Right.
So we are pretty, ruthless about just cutting those losses. Those of us who trade momentum who have become successful at least. But with you, your strategy has required you to be comfortable being red first, probably on the majority of your trades.
Yes. Because once it starts working, but that could take a while. Because if you think about it, we're experiencing momentum on the front side. It'll hit a level, and for whatever reason, it will start to form a little bit of a top.
Right.
And we'll trade up there for, 5-10 minutes, maybe longer sometimes. And that's where I'm starting to build my position, into that strength and hopefully getting filled on the ask. And normally it's in this channel that can go red for me for a while. I might even test those tops, break out, come back into that range. And
so that leaves a little bit of emotional gray area. Like for me, as soon as my P&L is red, I'm just like, probably time to cut it. I mean, again, it depends on the market, but generally speaking, you are comfortable being red, but then there's a gradient there where it's like, okay, I'm getting a little more red than I like, but I'm used to being red. That's okay. And now I'm 5 times more red than I'd like, but then it almost looks like an even better short because now it's even more extended. So when it does reverse, so I can see how you can have that temptation to kind of just keep adding. And I've done the exact opposite when I've tried to buy huge washouts. and I'm looking for a bounce, and I'm like, okay, this looks really good at 6, and then it halts down and it's at 5, and I'm like, well, it looks even better now at 5.
Right.
Then I add more at 4, and then I'm like, oh my gosh, did I just lose 50% on that trade?
Yeah.
Like this thing just keeps going lower. The market can be irrational. So
Can
that's
stay a
part of
lot more irrational than we could stay solvent, as they say.
Right.
So and to me, it really becomes just a giant math equation in my head.
Okay.
You know, I'm thinking, you know, if I add up here, you know, what is my price going to be? How far back down do I need to get to even, to get to profit? Is it worth it? Should I stop out now and reposition?
Yep.
You know, and these are all the variables that are going through my head at any given time in a trade. It's a lot to think about.
Yeah.
And like anything, the more I experienced it, the more I watched it, the more different scenarios I've been in, the better I got.
Yep.
So,
well, I'm sure you guys have a lot more questions for Chris. You'd like to learn more about trading to the short side. And what I would say is make sure you check out more episodes right here and come over to Where You're Trading, because Chris is trading every single day side by side with me, and he's got great ideas he's sharing, and you know, we're all in this together. So whether we're long or short, you know, this is part of the journey. We learn together, we trade together.
we do.
All right. So thanks for tuning in. I hope you check out some more episodes on the channel. We'll put some links down in the description, and we'll see you for the next one. Hey, I want to thank you for watching this episode. I hope you really enjoyed it. This channel has crossed over 1 million subscribers, and it's thanks to viewers like you. If you want to check out a couple other episodes that other traders are watching, you can see them listed right here. Thank you as always for tuning in. I hope you subscribe to the channel.